Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience of SmithWeekly, including Craig S., Jake V., Gordon S., Sean M., and Todd A. On the program today, we have a returning guest and one we're pleased to have back with us to update. Alex Black is on the program. Alex is the executive chairman of Rio2 Limited, a Chilean-focused gold project developer and near-term producer that is constructing the Fenix gold mine in the Atacama region, northern Chile. Under the initial stage of the mine, Fenix is expected to have annual production of about 91,000 ounces of gold over the first 12 years of operations. During this time frame, the mine has the potential for significant expansion of the production profile. Rio2 is listed on the Toronto Venture Exchange under the symbol RIO, as well as on the US OTC markets under the symbol RIOFF. Mr. Black, it's great to have you back on the podcast for an update. Welcome, sir.
Thanks, Andrew. Thanks for having me back. Good to be back. Thank you.
Yeah, it's good to have you back, Alex. Here, lots of stuff happening in the market. Of course, Rio2 right now is purely being driven on company-specific drivers and successes. And you guys are well into construction here and lots of stuff happening at site, which is great to see after all these years. Want to get right into company updates here, Alex, and then we'll maybe wrap up on market views from you. First, the company received its second payment of $25 million last month under the stream agreement with Wheaton Precious Metals. Cover that off where we are on capital expenditures for the project completed, the budget to finish, and of course, the milestone items being progressed and completed at the site.
Okay, well, yeah, you're right. We drew down on the second part of the gold stream with Wheaton, the $25 million. We're about to put out a press release probably in a week or so's time. We're just trying to get all the numbers together, which is a quarterly update of progress. And that's budget, time, people, safety, etc., etc. So rather than get into detail, I'll wait for that press release to come out. But what I can say is that we're tracking well on budget and on time. We have guided that we should see first gold production in January of next year, which is still our thinking. There's nothing that's changed our mind from that. Progress has been happening very well on site. We post regularly on all social media platforms, photos of updates, etc. I think that's the best way for people to get a feel for where we're at. Things are tracking well. We still have a $100 million gold prepay facility with Wheaton Precious Metals for the remaining capex of the project. We still haven't touched that yet. We still haven't drawn on that. So there'll be two draws on that, a $50 million draw, two $50 million draws on that amount of money during the year. So things are tracking well. As you also know, we also have a $20 million cost overrun facility in case. I don't think we anticipate touching that $20 million cost overrun facility as things are tracking at the moment. So yeah, we're very happy. We've got more than 1,200 people on site between ourselves and our various contractors. Things are buzzing along. People are getting into the rhythm of how we work. Our work culture, the Rio2 Fenix Gold work culture is something that we promote very strongly. And Andrew Cox, our president and CEO, who is leading the development of the project and the construction of the project, has everybody firing on all cylinders at this time.
Alex, that's good to hear. And good to hear you guys have, of course, you and I discussed this in the past, the contingency money. There's so many factors both on site for contingency and then also market conditions. And as we'll get to this at the end, some of these uncertainties in the broader market are certainly affecting us folks in the junior natural resource sector across the various segments within the sector there. certainly having that contingency money available for concerns in the market are always important. And so definitely good to see everything is going well there on site, and looking forward to that news release with more detail on status. And then, of course, do encourage our audience. Folks definitely need to follow Alex and his account on X, as well as Rio2's account as well there, to get some of the updates and photos that are coming out with that. Alex, you said first gold in January of 26. Just talk a little bit more there. Give us a little bit more flavor as to schedule updates as you're seeing them a couple months in to construction here. When you would expect maybe the commissioning work to start up. We know when first gold would be, and then maybe if you can speculate a bit for us here, when would you expect a fully ramped up steady state? Would that happen during 2026? What's your thoughts on that?
Okay, let's talk about the first question, which was in respect to the plant. You know, commissioning and all that. The plant in a gold heap leach project, the plant is very simple. In our case, we've got a run of mine gold heap leach project. Run of mine means we don't crush. So when you look at our processing plant, and I think that's one of the next things we'll put up on social media is an outline of our plant. It's really just pipes, tanks, and pumps, right? Once you crush the material on the leach pad, you irrigate it with a cyanide / water solution. The gold comes out. The gold gets pumped into the plant, and it gets pumped through the carbon leach tanks, and the gold sticks. And this is very simplistic, right? Gold sticks to the carbon, and then you extract the gold from the carbon. There's a process to do that. You extract the gold from the carbon, and then you produce doré bars. So if you can imagine that sort of process, it's just liquid going through pipes and being pumped to tanks, and then you're producing like a concentrate of gold, which you then cook or refine to a certain extent, and you produce gold doré bars. So it's a very simple process. So there's really no commissioning and getting crushers and mills and float circuits and all that sort of stuff working. It's more simplistic than that, which we like. We're very simple people. And it's nice to have simplicity in the gold mining business, I can tell you that. You don't want to
Absolutely.
complicate things.
Yep.
So we take that process. Now we'll start leaching and generating this pregnant solution that will go through the plant later this year. And that'll accumulate, and it will eventually turn into the production of gold doré bars in January. So there's nothing major that happens between the time we put ore on the pad, we irrigate it, and out comes the doré bars. It's a very simple process.
Yeah, Alex, look, I know it's certainly a simple commission, man. It's the best kind of commission we can get out there. And I was actually referring to the commissioning of the coffee pot in the break room. No, but you're absolutely correct. And it's so simple. In fact,
No,
that
and
even the
it's good for me to explain this, because I can tell you and all the listeners, heap leaching of gold is not commonly understood. And when people look at a gold heap leach project, they look at the grade, usually half a gram or something like that, and they go, "Well, how do you make money out of that?" And then they try and understand the whole process. Whereas typically in gold, it's a CI carbon in leach plant where you mine the material, you crush it, you mill it, and you produce gold that way. And the recoveries are all typically plus 90%, etc. In those sorts of typical processes. But gold heap leach is something completely different. So it's good to be able to explain that to people, and I need to be able to explain that very simply and very clearly as often as I can.
it's a good, clean, simple process, man, and appreciate you going through that. The second bit was, and this is also something that should be generally fairly straightforward and more quick given the simplistic nature of this project, is basically that ramp up period, and since first gold
Oh yeah,
to
yeah,
basically ramp up. Yeah.
yeah. So next year, the whole of next year, so 2026 will be a ramp up year, And what you'll see is, and once again, we haven't officially guided, but let's call it around 70,000 ounces of gold will be produced in 2026. And then by the end of 2026, we'll be at a run rate of about 100,000 ounces, which should be what we produce in 2027. And then we do 100,000 ounces for near on 2 or 3 years. As you correctly indicated, it's 91,000 ounces on average for the first 12 years. And that's at 20,000 tonnes a day order pad. So it's our starter project. And the reason there's a sort of year of ramp up is because we're mining the peaks of an extinct volcano. So if you can imagine, you're standing on the top of a pyramid, let's say from a visualization perspective, and you've got to take that pyramid down. Well, it's pretty hard and a little bit slow at the beginning because you haven't got a lot of working space, right? Because you're sort of on this point. But as you slowly bring that down, you start to open up the work areas, etc. The good thing about what we're doing is that the ore body outcrops at surface. So everything that we mine from the surface is likely, and we're confirming that now with grade control drilling that we're doing this year, is mineralized. So the strip ratio will be negligible, probably close to zero. The average strip ratio for the 17-year mine life that we've outlined in our feasibility study in 2023 is 0.85 to 1. That's a very low strip ratio for any mining operation anywhere. But what you'll see in the first year or two is a number probably lower than 0.85 because of the fact that most of the material will be going not to the waste pad but to the leach pad. Hopefully that answers your question. 1 year of ramp up, and then we're at 100,000 ounces. And we'll be at 100,000 ounces. Our prediction is we'll be at 100,000 ounces until we do our expansion, which is likely to happen in 3 to 5 years' time.
Why don't we move to that for just a moment? Well, first, before I come to the expansion, we'll talk about that in a moment. Alex, as this gets back into the market here, but we'll save the market conversation for a moment. But with current gold prices, the starter project as it is, as it's intended to be here in 2026, just talk a little bit about the current figures that this thing will be throwing off here based on we have a similar gold price next year. Just talk about that upside leverage that the project is going to start offering, assuming the gold prices
Yeah,
remain
well,
where they are.
yeah, I mean, we're in the right place at the right time for a change. I
Yeah.
mean, when we went through our EIA problem, we were in the wrong place at the wrong time. So it's good to be on the other side of the coin. Yeah, look, our AISC, as determined in our feasibility study for the life of the project, was $1,250 per ounce. That's for the life of the project. So that's an average over 17 years. I think given where we're at, and because of what we're doing in that first year, we should be around there because we're not going to have, a lot of waste movement initial years, as I mentioned to you. The first year, because it's a ramp up year, it's difficult to say where AISC falls. And that'll be something obviously on a quarterly basis that we'll monitor and we'll report back. But let's assume that we achieve 1250 AISC. It might be a little bit less, might be a little bit more. The margin between costs and the gold price will be in excess of $2,000 per ounce. Now, if you multiply that by 70,000 ounces, that's $140 million before tax in the first year of production. For a first year producer, that's not too bad. So, yeah, if gold hangs around where it is at the moment, that's going to cover us really nicely in the ramp up phase going into. And obviously, we all feel that gold's probably not going back down to $2,000 anytime soon or lower. The good thing is, and this is something I always stress to people, we don't have a project that we're bringing to the market because of the gold price. Because our AISC is estimated to be $1,250, this works at a low gold price. And when I say a low gold price, the gold price could be $1,500 and we've still got our head above water. So a lot of projects you'll see in the next year or two will be presented to the market because of a high gold price. They probably don't work at sub $2,000 gold prices. Some of the projects you'll see in the next few years. Ours is not that. This is not dependent on the gold price.
Absolutely, and it's good to have everybody understand that. Notwithstanding, of course, if we do keep the current prices, this project will show tremendous leverage, which we'll see that in due course, Alex. Which and then, of course, not to even mention, I guess that spills into the expansion bit. But with that, why don't we just talk briefly about some updates? And of course, I know this remains preliminary, Alex. You guys have a lot more work to do before you start to focus heavily on this. But with the project as we see it now and as it's planned, any updates as far as, or any new updates you can give us, and any comments as far as the potential for expansion of the project? Of course, we know that's coming. And then also what you see that timeline would be, Alex.
Look, we always guided that we will put out an expansion study this year, and that will be probably at a PFS level. We're still on track as far as we can determine to do that. The key component to that expansion study is water, and we've been working pretty diligently on trying to come up with a water solution and locking ourselves into a water solution whereby we understand what the unit cost of the water will be, the capex required, if any, et cetera, et cetera. So that's the first part of the jigsaw puzzle, is what is the water solution. I've made no secret of the fact that we are working together with Kinross, our neighbour. Kinross have the nearby La Coipa mine, and they also have on the table for bringing into production by the end of this decade, which is only 5 years away, the Lobo Marte gold project, which is to the southeast of our Fenix gold project. Lobo Marte, I think, is about 8 million ounces of gold contained. So with Kinross, we're working on the water solution, because this water solution is not going to be just for us. The other thing is there's been recent connection with Codelco as well. Why Codelco? Because Codelco have a big lithium project on the Salar de Maricunga, which is to the east of our project. They will need some water, even though they're producing lithium on a salar. There's a certain amount of water they need, which they won't be able to pull from subsurface, that they could do from any sort of pipe infrastructure that we put in place for ourselves and Kinross to satisfy our requirements. So that needs to be clarified with everybody. We're not looking at this as a solution just for Fenix Gold. We're looking at a solution for multiple projects in that area. And with that makes it even more simple and more cost effective to put that infrastructure in place to provide water for ourselves. Now, the water we're looking at is desal. So it's from existing producers, not from something that we have to build ourselves. It'll be a desal project that has excess capacity, that's already providing water in and around Copiapó, which is our nearest regional centre, 140 odd kilometres to the west of us. And it'll be, how do we get that water from that desal plant and that desal provider to the project? Obviously in a pipe, and where would that pipe run, and how much would that pipe cost, and what would be the operating cost of doing that. So that's all coming together right now, but that's really the critical item for any study that ourselves or even Kinross will do, or even Codelco would do, in respect to what we're all doing in that region.
I'm looking forward to seeing when that study's going to land here and what the contents are and how you guys are looking at this. I know that there's a lot to be had here, so I'm excited to see how that looks after all these years, now that the project is now cash flowing and the eyes are going to start being turned towards that expansion work. How about capital structure here? just give us an update on where we stand. I know we talked a little bit of figures and what's still yet to be drawn on the project, but maybe just talk a little bit about that current balance sheet, if you will. I'll call it that for now because you guys are going into that mode. And then also, of course, the shares outstanding at the company.
Yeah, I mean, we're just over 400 million shares on issue. There's no warrants. There are options. Obviously, we incentivate all our people. I think we did an option exercise recently where we stated that we had distributed options to plus 40 odd people in our company. So, we're not one of these companies that just issues options to the board and to executive management. So options on issue, most of those now are currently in the money. Our share price is around 90 cents. Our market valuation is, I think, around 380 million Canadian, just over 250 million US, which is still a very small number, I can tell you, in comparison to some of our peers who have recently put some mines into production. So we've got a bit of catch up to do. Money wise, yeah, I mean, we've got all the money we need to build this project. Um, you know, Notwithstanding that, we are active on M&A, looking at potential asset disposition by various companies. We're also looking at other interesting junior companies that may look interesting combined with us and what we're doing. If we do any of those sorts of things in the next course of time, maybe we'll need some more money to top up and direct towards those projects, but there's nothing imminent from that perspective. So we're fully funded both on equity and debt, and we've still got quite a bit of value creation to make. But as you can see with our share price graph, we're starting to get closer to that re-rate. We've got some targets by some analysts out there of $1.40, $1.50. So we're gradually clawing our way to that sort of valuation, given how we're tracking with the project.
No, that's absolutely good to hear, and also interested to see what details might come up on that front as we move through the course of this year and, of course, into 2026, where you guys will certainly be into cash flow at that point, Alex. So good information there. Good to understand where we are here. And I guess from my standpoint here, looking at Rio2, and I encourage the audience to take a hard look here, as this company is coming up on a cash flow event soon. It's going to be a near-term producer. Project risk is super low at this point. Can't eliminate all risk, but there's very low risk in this project from where it stands today. And of course, the market's starting to realize that, as you can see, the share performance. And yet there's a lot left to go if you just do some basic math and then, encourage folks to take a look at the expansion and how this project looked in of course, under the prior owner of the project before Alex took over. There was always the intention to move this project into a larger production profile. So encourage the audience to do a little bit of work on that and also take a look at where we're at here with cash flow coming soon, which the market does reward that as we get to that stage. Of course, any other comments on what I just said there, but wanted to just quiz you here on the market conditions out there, Alex, as well as sentiment for development and near-term production juniors, not to mention, of course, the sentiment down the food chain further, of course, pretty beat up there. Wanted to get your thoughts on the broad market as well and how that, of course, ties in because they do impact, of course, valuation. And then, where Rio2 here is clearly being driven by company-specific success, which tends to only be the savior out here in this market right now, is the company-specific success that you guys are having that has a little bit of respect out there from the market at this point. Just talk a little bit about those conditions, broad market, and of course the sentiment in the various segments.
Yeah, I mean, I think as everybody probably would agree, the junior exploration, the resource exploration sector is still unloved and not getting much of it. The majors who are producing, the majors and mid tiers, they're obviously getting re-rated and and enjoying some good value generation because of the amount of cash that they're generating. So it's good to see that. You're starting to see generalists, analysts, in the media talking about getting into the miners. So that's interesting. That could be the kiss of death as well, but hopefully it's not. So it's good to see that. In the developer phase, as I said, right now there's three gold companies that are imminent, that are building at the moment and are imminent producers. That's us, West Red Lake Gold, and Erdene. There's a bunch of other companies that have got development projects that may try and get financed, etc. And as I say, there's a lot of projects out there that are relying on the high gold price. I don't think that's the case in those three that I mentioned to you, of which we're one. So yeah, I mean, it's still, people still don't like risk in the gold sector particularly, and that's what I know best is the gold sector. And ourselves, West Red Lake and Erdene are in a risky situation because we're building, right? I mean, we know that not all the risk is out until we produce our first bar of gold and we start hitting a steady production rate. So people are still holding back on companies like ourselves. But in our case, and this is something that we've been marketing a lot about, this is not our first rodeo. We've built two similar gold mines in the past in our previous company, Rio2 Mining, which existed between 2009 and 2015. We grew that company from a $12 million market cap in 2009 to a takeout in 2015 at $1.2 billion. So we know what we're doing, right? Corporately, technically. And so people should feel comfortable about that. That doesn't mitigate 100% of risk, but it's something that helps. Yeah, so I think with time, we'll start to see a good, clear re-rate of our story, but it's going to be significant from where we were. I mean, at 90 odd cents, our share price is at a plus 3-year high. I mean, we tanked to 10 cents when we had the problem with the EIA back in 2022. So if you look at that, from 10 cents to 90 cents, we're a 9-bagger since then. For those who had the faith of getting involved and buying some stock at 10 cents. So, that's the vagaries of the market. Unfortunately, it is volatile. But right now, from a gold perspective, we're in a strong gold price environment, which I think is going to continue for some time. And we've got a great project that doesn't rely on the current high metal price to be profitable.
Well said there, Alex. Absolutely. And it has been quite a ride for investors and, of course, folks that were able to allocate more to their position or start a new position down at those prices. And then, of course, even today, where the company stands today and that prospectivity with respect to the leverage on the gold price, and then also where the company stands today from a near-term production stage. The market definitely picks up here right at the end here and starts to reward that valuation. So I know that's going to be delivered here in the coming months and in the coming year plus as well, Alex. So it's a good opportunity to take a look here. Just with that, Alex, any closing comments before we wrap up here? And I want to ask you this last chance to plug Rio2. Of course, we like it over here. For potential investors who are listening in, the company has a market capitalization of about 355 million Canadian dollars. Why should Rio2 be considered within the institutional, family office, and retail investors portfolio at this stage?
Because of what I've been talking about, the move to production, there's not many junior gold companies that are in our position at the moment. And obviously the producers, as we can see, are getting recognition for the fact that they are generating cash and generating very, very strong balance sheets. So that's all I can say. We're in a competitive environment. Obviously, there's in North America we've got a lot of competition. I mean, I'm talking about the resource sector in general and the junior resource sector. Bitcoin, the general markets, the Dow, the Nasdaq, et cetera, which are dominated by technology stocks, et cetera. So there's a lot of competition out there, but I think the recognition of gold and what it's playing in these uncertain times that we're going through is not a bad place for investors to consider putting some of their money.
Appreciate the comments there, Alex, on this, and we're very excited to see what happens with this company over the next 12 months, especially as you guys start to get into cash flow here. So well done, and of course there's more to do, but certainly the accomplishments so far definitely deserve some thanks and appreciation. Alex, for folks who want to contact the company for further information, what's the best way to do that?
Always contact me. I'm available to anybody, whether they're a shareholder or not. My email address is alex.black@rio2.com. As Andrew was saying, I'm also on X, and I, have some fun there, but I also try and give some advice. My handle there is @blackalex58, so people can find me there if they want to. And and Rio2's in all social media, X, and all the other platforms. So you'll continually see updates, photos, etc. of what we're doing. But if you want to contact me, the best way to do it is by email, and I'll always respond.
Alex, that's great. Appreciate that, and encourage folks to reach out if they have further questions for the company, and of course for Alex there. And do reiterate there, the follow on Twitter is always very useful to keep in touch with Alex and see what he's thinking out there. Alex, always good to catch up here. Keep up the work on the ground. Looking forward to more of that progress, and of course looking forward to having you back to update here in the coming months.
Thanks, Andrew, and it's good to be back, and it's always good to give updates and explain exactly what we're doing and the processes we're going through, so I appreciate the opportunity.